Hi Forex traders, so let's do a top-down analysis for the dollar index, foreign currency, and commodity assets that I like to trade. This is Monday, 5th of May 2025, and it's basically about just a few minutes to the New York session, and it's the right time to do your top-down analysis. So let's start by simply looking at forexfactory.com. We are looking at the economic calendar of events simply to identify high or medium impact news events. That way we know which currency pair it's most probably, it's going to have the most probable liquidity or volatility in the trading day or the trading week. And clearly you can see on the economic calendar, Monday 5th May, we basically have high impact news only on the dollar index. On the dollar, coming up around 3 p.m. Today, the GBP is experiencing bank holiday. The Japanese yen as well is experiencing bank holiday. So if you are trading GBP or the JPY associated currency, you're not going to see any form of volatility because of this bank holiday on these two assets today on Monday. So on Tuesday again, the JPY still is going to have bank holiday. There's not going to be anything moving there, but you can see there's high and medium impact on the NZD, the Canadian dollar, and the CHF. So that currency may most likely move over others. Then on Wednesday we have also FOMC around 7 p.m. Then on Thursday we have high impact on GBP with Euro experiencing bank holiday. See that? So go through all the economic calendar and identify all the high and medium impact news events and pay attention to the time, the day the asset is going to be impacting, so that it helps you know which currency to focus on. So today we're looking at the dollar, and remember we did an analysis yesterday. If you've not watched my commentary yesterday on the relative index of a currency pair, go to my YouTube handle and make sure you watch that video. It gives you a foundation of the top-down analysis we did yesterday. However, today we're just going to go through the dollar once more, starting with the daily time frame. And on the daily time frame, last week we saw the dollar traded into that bullish order block with a fair value gap, and we were anticipating to see this guy trade into this drawn liquidity above the fair value gap, the IOFED, institutional order flow entry drill, with an old low in between. That fair value gap with an old low in between, we want to see the dollar trade into that level, except if the bullish order block here is violated. This still holds until we see the dollar trade into this premium level. When you measure the range between the high to the low using your Fibonacci, you will notice that we need to see this guy trade above 50% of this price range, giving us a premium level to sell the dollar. Remember, we sell premium, we buy discount. Then on the 1 hour time frame, we've seen the dollar created something from last week, and last week we've had power of three concept: price action, accumulated, manipulated, retail, created that displacement to the upside, all right, or distribution to the upside that took out the external range highs, the relative equal highs there, the old high and the old high there, and price traded back into internal range. Remember, for every external liquidity taken, price will retrace into internal range to reprice into other blocks fair value and create another expansion to the upside. Guess what happened? We were looking at, so yesterday I mentioned that we want to see the dollar trade into this fair value by the right, fair value by the left, more like an IOFED. And of course this guy has traded into this area, and we want to be looking for more confirmatory signatures to buy the dollar into those drawn liquidity higher. And on the 15-minute time frame, I'm also seeing something significant here. Failure swing, shift of market structure right here, shift of market structure bullish, and it has a bullish order block right there. Just about that area there is a bullish order block, so we may want to wait until we see the dollar trade into that bullish order block on the 15-minute time frame, tap into that area and possibly start to trade higher. Alternatively, on the second thought, I'm also seeing the dollar reacting of a bullish order block. Do you see that large sell candle right there that was traded through by the buy candle? Do you see the impulsiveness of the buy candle? And when treating other blocks, we pick out the candle with the largest body. So that large sell candle that was traded through by consecutive buy candles is the bullish order block. We tapped into that area the first, the second time, created shifting market structure, bullish right about here, and price action again has traded back into that same bullish order block right there, again within the same bullish order block here that was created. Is still not violated. So for me, if I'm going to get a buy, I'm going to get a buy around just about this time on the dollar, but my stop loss is going to be below this bullish order block. If I put it up here, price action may want to just take me out. If you want to be conservative, you can put it just away from a little away from the bullish order block here, considering a second entry at the bullish order block below. Or if you have much liquidity, put up your stop loss below that area. Price action will most likely respect these levels, and we want to see the drawn liquidity, trade into this level right here. The drawn liquidity above these areas, and also into the fair value that we outlined on the daily time frame. Then we're looking at the Euro USD, since the GBP is experiencing bank holiday today, so most likely the Euro USD will present more price action, good price action, to sell much more than the GBP. Okay, so looking at the Euro USD clearly also, let's take a look at the daily time frame. And what I see on the daily also is, you can see that we're beginning to see price action create lower highs. Initially we've been creating higher highs, but all of a sudden price action is declining and showing signs of a decline in bullish momentum. Price would want to reprice into that fair value below, that internal range fair value with an all high in between. That's the area we're looking to see this guy trade into. And on the 1 hour, just like the dollar, the Euro USD is also reacting of that fair value gap right there. And when we look at the 15 minutes time frame, let's see if we have something on the 15 minutes time frame. Price action, I would like to see price react off that reclaimed bearish order block right there. Price action took the bearish order block all the way, and we traded right below it. Did you see we traded back into it right here? The reaction at the reclaimed bearish order block is very powerful. So I'd like to see the Euro USD as well sell into the drawn liquidity right below the relative lows here. I'd like to see this guy trade into that level. Then let's look at gold. Remember, the GBP JPY is technically just experiencing a bank holiday. So gold actually delivered amazingly today using the IOFED on the 15 minutes time frame. But before that, let's take a look at the daily time frame. So look at what gold did on the daily. Gold traded into the rejection block right here on the daily time frame. On the weekly time frame, let's see what that looks like. So on the weekly, we've seen gold, ignoring that fair value gap that we were anticipating to see gold trade into. Rather, gold traded into that rejection block here on the daily time frame. Let's see what that looks like on the 1 hour time frame. On the 1 hour time frame, again, gold simply took out liquidity below that low and traded into that bullish order block right there. Bullish order block there, took our liquidity below that low and traded into that bullish order block and created shifting market structure bullish here. You see that price action traded into the bullish mitigation because we've had a failure swing before the shift of structure bullish here. Traded into it, created an expansion, then traded back for a second re-entry. Those of you who are in my one-on-one mentorship, of course, you know what this pattern looks like. Price action came back, to take our liquidity right here. You see that? Took our liquidity right there and traded into that bullish mitigation there, as well the fair value gap right there. Price traded into it and created another expansion. So today, during the London Open, we saw an IOF ED on the 15-minute time frame, more like price action trading into that fair value gap with an old high in between. That is an institutional order flow entry drill on the gold. So the entry would be at the low of the fair value right there, with a stop loss below the low of that candle. That old wick in between is the confirmatory signature for this kind of entries. Price action traded into it, and look at the massive move on gold into the joint liquidity, relative highs, the old highs there, and the relative highs on the gold asset today. Okay, so those of you who have been asking me questions to recommend you a proprietary firm that offers synthetic indices trading, so today I'm going to be doing that. I'm going to be recommending you to this proprietary firm that gives you access to trade synthetic indices, volatility indices. Those of you who've been trading the REIV assets and all that, you can get the same asset on a proprietary firm, and you have access to large equity. You can see you have up to 5,000, 10,000, 25k, and even 50k, trading account on synthetic indices on this proprietary firm, FX Life Capital. So make sure you use the link on the description of the video so you can have access to discount, and make sure you also use the coupon attached on the description of the video to get a discount when you are purchasing an account with FX Life Capital, so that you can have access to larger equity. And they are not just about synthetic indices. You can also get Forex assets. If you want to get funded on to trade on Forex, you can as well go through all the all the models they have for Forex. There's step 1, they have a 2-step, and all of that. So you should go through and check the accounts. If you even want to get funded instantly, you can get instant funded on the same platform. Just click on instant funded. Once you click the link on the description of the video and you sign up, go to proprietary firm, and you're going to see all these things. They are not just a proprietary firm, they are also a brokerage firm. You can as well fund and trade, or alternatively just go to the proprietary firm aspect of this platform and pick out the one you would like to trade, either synthetics specifically, or alternatively just the other assets that you may like to trade. That's two. So don't forget to send a DM to join me on my one-on-one mentorship for access to my quality trading models, and you're going to learn exactly how I look at the market, the things I look for when I'm looking at the market, and also you're going to get easy access to accountability coaching, close mentorship relationship, all in the mentorship.